Hello friends and welcome to my YouTube channel Simply Stocks, and today I'm going to talk about Suprajit Engineering. Has the bottom made in the stock and whether you should invest in it. So let's get started. First of all, a disclaimer that this is not a stock recommendation. People taking any position to any share that I talk about should do that with their own due diligence and research, and I'm not in favor or against any company that I talk about. Before I talk about Suprajit Engineering, here's a small request that kindly support me on Patreon, and once you do that, it will help me grow the channel, help you also ask me questions in greater detail. Once you get the $10 membership, you'll have access to my portfolio, my watch list, and a number of podcasts that I put up on markets and stocks, plus articles that I write. For detailed market or company talk you want on an individual basis, kindly email me. Now about the company, Suprajit Engineering was established in 1985 and they are into auto components manufacturing. They boast of marquee clients in the two-wheelers, four-wheelers and CV space. Primarily makes auto lighting and motion control equipments plus speedometers for different auto products or automobile companies. Have global presence with clients across Europe majorly. Clients include Maruti, Honda, Bajaj Auto, etc. If you look at the numbers, then the numbers have not been that great for the first quarter, as has been with all auto companies. Auto ancillaries and auto companies have taken a real hit with the kind of shutdown in businesses we have seen. So the market cap of the company is around 2500 crores, 2200 crores or so. Sales at 177 crores versus 363 crores, so that's a dip of around 50%. It showed a loss of 14 crores versus a profit of 24 crores. So it's a complete turnaround to what took place from 2015 to 17. So since 2017 and or early 2018, the stock and the company has been under pressure, as has been this industry. So for the last 3 years, and this has just culminated into something even bigger with the shutdown and with no work for at least 45 days of this first quarter, and that has just shown on the numbers that we are looking at. There is a reasonable amount of debt, and that is a big you can say negative, because most of the auto ancillary and auto companies have less debt, some with no debt, ancillary firms, but this one has a decent amount of debt. Margins have shrunk. It currently trades at around 35 to 40 times earnings, which looks extremely expensive, even though the stock price has fallen a lot. And that is my concern, that okay, these auto ancillary companies are moving up, all these have moved up a lot. But will the numbers come in even after the September quarter? Let's say if the September quarter is not great, then will the numbers be in by say December or the March quarter? I still have doubts, because winters could see a surge in cases, etc. So that's a different point altogether, but that has a link to the business per se here in India. So in my opinion, there could be tough times ahead even for auto ancillaries. A decent combined promoter and institutional holding with 25% free float with retail investors, so that's a positive. So if you look at the performance of the stock has fallen sharply since January of 2018. As I mentioned, from second half of FY18 till today, the industry along with real estate, infrastructure, etc., have been in complete doldrums, have been in complete chaos, and with virtually no work. Many of the companies have less work now, with people making less amount of money and people losing jobs. There's even lesser chance of people buying into new cars and bikes. I have a different opinion to what the consensus is with respect to the number of sales or the surge in sales that they are expecting in the you can coming season, or in the season of the festive season, and post that going into summers. uh, I have a feeling that okay, this year could be better compared to the June quarter. The last two quarters could be better, but the real you can say impact of all the problems that we are facing at the moment with respect to economy would come in front by FY22. So we'll see what will happen, because FY22 will really test as to how these companies, along with infrastructure, real estate, cement, etc., would do. It had fallen 45% during the Feb March fall. It has recovered little from those lows and has been doing well recently over the last 2 3 weeks. But on a 5 year basis, it has done virtually nothing. So went up a lot and then fell. And that is why I'm not a big fan of these auto ancillaries or commodity companies, because you don't have a streamlined kind of a move on the stock, and you don't have a very symmetrical chart in which it is a continuous uptrend that you'll see that into pure consumption stocks for sure, or even IT stocks for that matter, if they continue to perform. Oh, so results have remained subdued, as I have mentioned, and low return ratios is also a negative. So why there has been a slowdown? Auto industry has been under stress, as I mentioned, from FY18. So it is not because of the pandemic, not because of the shutdowns in businesses currently that we have seen such numbers, but from FY19 onwards, from the beginning of FY19 at the end of FY18, things were looking extremely bad, and that just continued and accelerated this year, and probably they would get better going forward. Some of the companies, not all, but some of the auto ancillary companies might perform better going into the deep end of the first half of FY22, so probably from April May next year. But till then, I feel that for the next 6 8 months, this sector could again be under pressure. So the lockdown or the shutdown has accelerated the decline. Uh, Commercial vehicle segment has been most hit, and Suprajit do cater to commercial vehicles as well. Uh, Economic slowdown in India and abroad has hurt the infrastructure, infra to the core. So you have the road infrastructure, the infrastructure industry, the auto ancillary, auto industry, everything has been hit very hard, and companies that are slightly in debt or slightly where there is leverage, they are being sold into by most of the investors, and this stock is no different. So economic slowdown across the globe has also hurt. Projection of further stress in the next 2 years is also making people move away from such stocks. But I believe not 2 years, but at least for the next 6 7 months, we are going to see the stress, and you could see 130 120 levels as well on the stock. Uh, all right, so looking at the technicals, major long-term support lies around 120. I won't be surprised if the stock falls from these 160, 170 levels back to 130 or so, and those will be decent levels to accumulate. I'm not saying that the industry is out, is in complete distress and will not go up. So I believe next 2 to 3 quarters could be tough, and these are the times to accumulate. And probably from FY22, as I mentioned, or late calendar year 21, things will get much better, and probably these stocks would double triple from these levels. But then you have to be conscious of the fact that whether on a short term basis there could be a decent fall, and I believe there will be one sharp fall in these stocks. A resistance zone is between 180 to 200. Very strong it would look if it goes past 235. Then we could see even 400 levels on the stock. The 200 DMA is around 160. So what needs to be done, in my opinion, if you have it, then hold it, um, and add around 130 120 or so. A cycle will turn around, as I mentioned, in 12 months time. A year to 15 months, a cycle should turn around. If you have a 5 6 year time frame, this will give you very decent return, and put only 5% of your total investment. So this was my video on Suprajit Engineering. Please like and subscribe my channel and hit the bell icon so that you can get my videos straight away when I post it. Thanks a lot for watching.